All right. Good morning, everybody. Hopefully, you guys had a good weekend. Little weakness. Asia started out green. Things turned red as we went through Europe. U.S. markets red, but really not that bad, right? We're just kind of sagging down a little bit, holding the line really more than anything else, waiting on data. We've got manufacturing data this morning, and it's still a growth versus value backdrop. So these two particular manufacturing events hopefully will provide a little more clarity. We got the Fed chipping teeth, including Powell this afternoon at 1 o'clock. This 1 o'clock event is a standout event. It's some 75th anniversary. It's very unlikely that he's going to say something new or really try to use this forum to shape policy, right? It's very unlikely. Um, what's more likely is that he'd just find a way to ramble on without really saying anything of note or importance, reflecting on the 75 years that this event has been, this agency has been doing its thing. You can read a little bit of that backdrop here. The International Finance Division, which has been around now for 75 years, they're having this big conference. So it's, very unlikely that that's going to produce anything of note, right? But it's marked red for a reason, because anytime Powell is out there chipping teeth, he can be taken out of context, misquoted. He can accidentally say something he didn't mean to say. The algos can trigger based on, a read of words that, maybe he didn't mean to put together. Anything can happen. So you just want to be aware of it. While anything can happen, we're really not expecting anything out of that event. We do have some auctions today in the front end, 3 month, 6 month, and we're going to get a little bit of talk from Christine Lagarde out of Europe. But really, it'll all be done through the morning session. The afternoon is just noise. There's still a little discrepancy between these two manufacturing events that we're going to get today. Um, we could see some clarity on those pockets of strength, right? That's where the discrepancy comes in. There's little holdouts of strength where everything else is showing weakness. So maybe we'll get some more clarity on that. Otherwise, they're both not looking good for that growth versus value argument. Yeah, see, there's not even going to be Q&A at that event. So really, I think the whole 1 o'clock thing is likely nothing. But stay consistent by keeping it under the radar or on the radar. The put wall was rolled back down. That was kind of the expectation once we didn't see the call wall rolled up, is that it was very likely the put wall wasn't going to stick. So now it's down to 57.11 cog line. We're still holding above the 0 gamma line. Volatility is within Friday's range, and the call wall is outside of last week's range, just barely above that 6,000 level, 60.11 cog line. We're dancing around with the 10-day moving average. Take a look at it on the daily first. It's this light blue line. So we dipped below it on Friday, managed to get back above it. We were below it again this morning, and we managed to get back above it. But really, it's been this kind of back and forth since we had this big violent move down into the 20 period here. So we got a little support off the 20. We came back up through the 10. This is the 10 here. And we need to keep it. And so far, it doesn't look like we're going to keep it. But it also doesn't have any value or context to us at this point. It's more of a, it's like looking out the window to see if the sun is up, right? It doesn't change anything. You're still going to go outside. It just provides a little context. If we lose this level, it's very likely we're going to refocus on 5850 and 5800. So that's our line in the sand. 5900 or the 10 period daily moving average. So now that we're back on the intraday, we can see how price has been reacting with that 10 since we got back above it. And we need to keep it. It also lines up with yesterday's low. So if we get down below yesterday's low, 5850, very likely we're going to go ahead and retest 5800. So just step by step. We don't have a lot of edge this morning when focused on the ADR lines, since we're basically just down 0.25%. It's a minor amount. To hit the ADR low, we can stay inside of yesterday's price action, but to hit the ADR high, we'd have to break outside of yesterday's price action. We'd also have to get through this gap that we left behind. It's not a really big gap, all things considered, right? But we widened it out quite a bit, and now we're headed back up there. So if we can get through our own Globex high, get the gap closed, break outside of Friday's range, then we can get to the ADR line here, 59.42. But that's a lot of pieces we have to get through, right? Step by step by step. The weekly floor pivot is at 59.11 cog line, and it's a really narrow channel. We deal with the narrow channel quite often on a daily, but we don't really focus on it that much from a weekly. But the context stays the same. This is last week's range. And that narrow weekly channel implies that if we break out of last week's range, that it sticks and we continue in the direction of the breakout. So we're talking about getting above 6,000 and holding it for the week, or getting below 5,800 and keeping that for the week. The week just started. We're basically sitting in the middle of this range. So, there's a lot of room for interpretation here, but that's what that channel implies. That's the insight it's giving us, that if we break out of the week, price can stick and continue to move in the direction of the breakout. For the day, the channel's a little narrower than Friday, but it's still a wide channel, which implies if we break out of Friday's range, we likely just come right back in again. And that's a setup for the trade that I usually play anyways. Yesterday's 111 or yesterday's 1236 reversal. Of course, to even trade that, we have to get outside of yesterday's range. So GTFO, got to get out of the box, got to get outside of yesterday's price. These last 3 weeks really highlight the situation that we've been in and the range that we need to get out of. We've now left distributions across the upper area, but we don't have anything down below here, right? 3 weeks ago, we had 59.11. Last week, we had 59.11. And in between these 2 weeks, we had these two other distributions, this higher one up here and this lower one down here. We tested that lower one Friday. It held. We came back up off of it, but we're still in the lower half of this range. So if we look at last week's candle, just market top, bottom, and 50%, we want to get through that 50% level. And right now, we want to get through last week's point of control, that 59.15 area. But it's a bit of a zone. It's not just that single point of control. It's this whole area, high volume node. Ten-day, 30-minute volume profile in TPO. The TPO looks a lot cleaner at this point than the volume profile does. But we are taking out the candles that put this point of control in. So we're focused on where is it going to go when it does leave this. We really don't have any insight at this point. We got to take these candles out and see what's left. Going to be happening through most of the week. As this week unfolds, we'll be looking for new positioning to really kind of shine a light on where this line is going to go and whether it'll be underneath this or over our head. But at this point, it's not going to change today. Very likely isn't going to change for a few days and it's just something that's over our head we got to work through. We got a new VPOC Friday. So if we do break out of our own Globex range this morning and try to make a run for it, we've got to get through that. It's also really close to Thursday's level, right? They're not sitting perfectly in line, but they don't have to. This whole thing is a zone. That spans over a 2-day time period, and just above that one is Wednesdays. So there's just a lot of stuff overhead. And it's not to say that we can't get through it or that we have to go down, because this stuff isn't pushing us down. It's not making us negative. It's just that roadblock that's in our way. So yeah, we can go up, but it's going to take something really positive to push the market through that trash. Something that can sustain the move. So far, we got nothing. So we looked at the range that was projected for this week on Friday, and it wasn't a standout week, right? Which is usually something really simple that we can look for. If the week was really big or really small, it could have stood out as something unique, something for us to dig deeper into. But the range from 2 weeks ago, we don't want to use last week, it was the short week. These ranges are really similar. There's not much between them. So it's not a standout week. Sometimes that's the best you got, right? That you look at all of the tools and nothing stands out as an outlier of risk. There's just nothing there. So there's nothing there. Still above the 10-day with a gentle decline coming back in. Again, nothing here. No big violent moves. We are within what I like to consider a bit of a gravity. So this area where we can sit for an extended period of time like we've seen in the past. Now, we don't have to do that. Obviously, we can expand up or down. But once we get into this zone, we can stay here for a while, especially if we don't have anything on the table that can really drive us out of this range. It's a good place for the market to heal, stabilize, digest the moves that it's already made. And looking at the 10-week, we're just holding the line after that big move in early May. Last few bars after that, keeping everything steady. So getting a little closer to zero this week would make sense. All we have to do is sit tight and the 10-week will come to us. So it's kind of the base case that as long as we stay in this range that we've been talking about all morning, then the 10 can come to us. Otherwise, we break the range to the downside or challenge that 10, likely get underneath it. Or we break the range to the upside and we continue driving farther away from the 10. it's been a nice reset, right? This is a correction that we've been dealing with. It's just been a correction in time rather than a correction in price. But still, it was a correction and a needed one after that move that we had. We don't have anything this morning from our risk on group. If we're looking for any sort of bullish assistance from the sectors, the industries, the hyperscalers, Mag 7, we got nothing. Bitcoin is down, chips, Mag 7, all down. Now, metals and mining are up, and precious metals and miners are up, along with energy, China, building materials, industrials. That's it. So that growth versus value, which was the title of this morning's morning briefing. So we got bonds down, Mag 7, chips. Without that, the idea that the S&P can break out and run is off the table. It would have to be headlines, right? That would be the only thing that can do it, or 0-day options flows, which we wouldn't see in the pre-market anyways. This tell that we've had for a while now continues to hold, with gold up, yields up, bonds down, market down. So if you're looking for a tell today that things are beginning to flip around, look for precious metals to stall out. They don't necessarily need to go down. They just need to quit going up. And maybe a shift in what we've got in the 10-year. It's not up by much, 0.25%. It's another opportunity for things to change here with the dollar coming into this level. That was a swift move to the downside. We don't want this thing making big moves. If we can find some structure here, see the dollar hold the line, quit falling, that'll likely change the backdrop. If it starts to rise from here, then that also should change things. So if we're looking for a reason to come out of this range that we're in, getting the dollar moving to the upside can do that. Yeah, gold's got a nice clean breakout. It already made it through the resistance level, and there's nothing in the way for a while. So we're not expecting gold to hit anything that would stop this move. So pretty simple morning, all things considered. We got to get out of the box. Start with our own Globex range. Since it's the smaller box. Get out of this. And then get out of this. Whichever side we break on the Globex, target that high or that low, right? Lays it out fairly nice. From there, if we do get outside of the Friday high, then target this roundabout, right? That we had that 6,000. And to the other side, it's 5,800. And I think a week and a half ago, they were saying there really wasn't anything down there. I think now there is. So, that idea of a flash crash below 58 is kind of off the table now at this point. We didn't get it at the time, and now the market's had time to price something in down there. So 57, we still have that gap close, like 56.70 something, right? So it's not a crash and burn. It would just be a swift drop at the worst. But level by level. Keep your eye on the Mag 7 and the hyperscalers. And that dollar move should be a real tell if it stabilizes and begins to go up, to kind of help us define whether we're going to get out of this range at all. Keep your eye on the clock. Watch the news. I'll see y'all tomorrow.